Okay guys, so in this video I'm going to give you my top 3 tech stocks to buy right now. Now all 3 of these plays will do very well within the current global landscape. A lot of people are spending time at home, a lot of people are quarantined, a lot of people are social distancing themselves, or just people are just taking it easy as things settle down due to the whole pandemic breaking out. So guys, I'm going to give you these 3 stocks right now, and then if you guys, I'm going to tell you a little bit about each one and why I like them so much. So my top 3 picks right now are Roku, that's symbol ROKU, Netflix, that's symbol NFLX, and Amazon, that is symbol AMZN. So why do I like these 3 stocks, guys? Well, I actually own all 3 of these stocks, and my biggest stake out of all 3 of these is in Roku, which is one of my favorite stocks of all time. It is actually a spinoff from Netflix. So guys, I'm going to talk a little bit about each one of these in depth. So let's just go through each stock, starting out with Roku. So Roku is currently trading at around $96. You guys can take a look at this 1-month chart. Netflix is at around $396, and we all know Amazon is pretty expensive up there, over $2,000 a share. So let's start off with Roku and why I like Roku stock so much. Okay, so let's head right over to some new news posted by Market Watch. Now, I've already been bullish on Roku. If you guys have been following my channel for a while, you know I posted some videos a while ago about Roku stock, and the stock was trading pretty cheap, around $76. So I'm going to pull up that, guys, on this chart. I'm going to show you guys how much it was trading at if we can take a look here. So if we pull up this chart. So now on Roku stock, Roku stock has had a lot of positive news coming out to the whole quarantine situation. A lot of people are sitting at home with not much to do, so they're streaming content, watching Netflix, Disney Plus, Hulu, things of that sort. So a couple of weeks ago when Roku stock was trading around $70 or so, I didn't buy it down here, but I couldn't resist and I picked it up at $76 to lower my average cost to around $100 per share, and I own 10 shares of that stock in my Robinhood account. So guys, why do I like Roku stock so much? Well, let's just head right over to the article and get right into it. So it says, this article was published on April 13th. It says Roku says coronavirus is boosting streaming, stock shoots higher. So it says streaming hours increased nearly 50% on Roku platform, which added nearly 3 million new accounts in the first quarter. So if you guys have been following my videos, as I mentioned earlier, I am so bullish on Roku because everything seems to go up quarter after quarter. Subscribers up, watch time up, average revenue per user up. Everything is up, so you guys can actually dig into those financials a bit to take a look at how good things are doing. But I want to keep this video short, and I want to go through all 3 of these stocks. So I just want to quickly talk about why Roku is doing so well. Well, simply because people are spending a lot of time at home. So it says Roku added more new users than expected as coronavirus swept across the globe in the first quarter of 2020. It said the increase accelerated as Americans began sheltering in place in March. The streaming television company announced Tuesday afternoon it added nearly 3 million new users in the first 3 months, more than 2.56 million net adds the analysts expected. The company said collective streaming hours for the period was 13.2 billion, up from 49% last year. So it says beginning at late Q1, Roku started to see effects of a large number of people sheltering at home. For Roku, this resulted in acceleration, new account growth, and increase in viewing, guys. So why is this so important for Roku? Well, Roku's, like many of these streaming stocks, the most important metric. Now, this is straight from Reed Hastings. He said this himself. The most important metric when dealing with these streaming stocks. So when you're analyzing Disney Plus, Hulu, HBO Now, uh, any of these, Netflix, of course, you want to focus on watch time, because how much time people are spending on watch time, that is going to tell you where the advertisers are going, because the advertisers are going to follow people's viewing habits. So as you can see, Roku sells ads on the platform in its own streaming channel along with its gadgets that help consumers stream to TVs. So it says Chief Executive Anthony Wood said there are concerns about advertising. He is confident Roku could overcome these issues. So of course, guys, advertising will be less in the short term, because a lot of small businesses and a lot of advertisers have cut those budgets to save cash, to maybe they furlough their employees and things like that. So they're not spending nearly as much money on digital advertising. What we're looking for here is subscriber growth, because those subscribers, a lot of them are going to stick around. People are creatures of habit. So they're picking up Roku, they're starting to use it. even when this thing boils over and things get back to normal. What are they going to do? Just delete Roku from not use it anymore on their TV? Probably not. I've been using Roku for years now. It's absolutely excellent, guys. I can watch everything from Netflix to NBA to Disney Plus. So it's basically become the hub of streaming. And the good thing about this stock is that for me, it is extremely cheap. So I want to show you guys that chart again. Now it's only at around $96. I'm going to show you guys what type of compounded annual returns we're looking at with Roku stock, and then we're going to move on to my next choice, Netflix. Okay, so a couple of more reasons why I like Roku stock other than that excellent article showing how numbers are way up. This stock is currently only trading at an $11 billion market cap. Now the stock is up a bit in pre-trading, so that number should adjust, but still $11 billion for the clear leader in the streaming revolution in the United States. So yes, there is some competition from Amazon. There is some competition with Amazon. They have a Fire Stick, and of course they have other competitors as well. But the good thing about Roku is that they are the clear market leader, and $11 billion for the clear market leader in the future of streaming is too cheap, guys. So even though this stock is up a bit in pre-market, I love this stock. This stock for me is one of my favorite holds. I plan to hold Roku a long time, and my target price for this stock well into the future after we see those impressive numbers, and as we see more and more people get adopted to streaming versus cutting that cable cord, which a lot of people are going to be doing in this recession, and even some people are calling it a depression. So that expensive cable bill will go. Roku is much cheaper, guys. You only have to buy, a lot of times it comes with your TV installed anyway, and you can buy your own Roku device for like $30 on Amazon.com, and after that it's free. You just have to pay for individual subscriptions to Netflix or Disney Plus or what have you. But guys, one of my favorite stocks out there, and my number one top pick. So the number two stock that I'll talk to you guys about, and we can just simply add it to the chart. Okay, so guys, let's move on to my second pick, which is Netflix. Now, you guys probably obviously know a lot more about Netflix than you do about Roku, but the funny thing is that Roku was actually spun off by Netflix years ago when the company realized that they wanted to focus on content and leave Roku to focus on kind of advertising and stuff like that. So the companies have two different business models. Netflix's business model is subscription based, and I've been doing a lot of reading on Netflix, and they never plan to sell advertising at all on the platform. So they're 100% focused on subscriptions, while Roku generates a lot of money through advertising and through getting a percentage of the revenue generated from subscriptions when people sign up through the platform. So the reason why I love Netflix stock, guys, is that it has actually been trading opposite of the market. So as you guys take a look here at this chart, I'm taking a look at SPX over the last 3 months. SPX, that is the index fund tracking the S&P 500. So the S&P 500 is down 15% over the last 3 months, and Netflix stock is actually up 18%. And why is it up 18%? Well, simply because, guys, a lot of people sitting at home, they're watching Netflix. So, during this whole quarantine session, I like to really, really listen out here for keywords, guys. So I'm really listening for the brands and the companies that people are using, and probably the number one phrase that I've heard is Netflix, Netflix, Netflix. So Netflix has seen an explosion in new signups. I'm going to show you guys some of those numbers that were projected, and one of the reasons why Netflix stock is trading at such a high point. So okay, guys. So the article posted on Investor Business Daily talking about Netflix stock surges after app downloads go gangbusters in March. So let's go into this information quickly. It says stay-at-home entertainment leader Netflix is the IBD stock of the day of streaming video service gains ground during the coronavirus pandemic. Netflix stock broke out on Monday. So it says Netflix is benefiting from increased viewership stemming from government shelter-in-place orders amid the coronavirus pandemic. Analysts say the company is likely to see strong subscriber retention as well as new subscribers during the disease crisis. So as you can see here, guys, Netflix app downloads up 57% in March. That is ridiculous, guys. So it says after a sluggish start to 2020, Netflix's global download growth has gone gangbusters in March as consumers shelter in place globally are likely consuming content at an unprecedented pace. Global downloads of Netflix apps rose 57% year over year, its fastest pace since February 2016. Growth was fastest in Asia Pacific region, where Netflix app downloads jumped 124% in March. That is ridiculous. And international downloads rose 21% year over year over the first quarter. So, guys, as you can see here, you got a lot of nice numbers into Netflix, and for me, Netflix stock is a buy and hold. Now, I want to show you guys some really crazy stats, and I know that a lot of you guys out there are hating on Netflix. You know who you are. You guys are saying, "Oh, it's growing too fast," or "Oh, they spend too much money on content and things like that." Well, let me show you guys these numbers, and you take a look at these, and you tell me what you think. So, if you take a look at these, I'm going to show you some numbers. Okay, so I picked up these numbers on Morningstar, guys. Morningstar, I'm starting to use this tool a lot more. It has some really interesting data. So what I did is I simply typed in the symbol Netflix, NFLX, and then I went to trailing returns. And what this shows, it shows you the compounded annual investment return of Netflix stock versus kind of the broad market over the short term and the long run. Now take a look at this number, guys. 43.67% total return over the last 15 years annually. So that means over the last 15 years, Netflix stock has gone up 43% year over year. That is ridiculous growth, guys. And like I said, when you're investing, a lot of times, obviously, the past is not indicative of the future, but from 2010 to 2019, Netflix was the best performing stock in the entire stock market. That means if you would just put all of your money in Netflix stock, you would have basically done better than any other investment available, in the American stock market. So, guys, what does this say about Netflix stock? Well, it says that even though Netflix has been growing like crazy over the last 10 and 15 years, 40 and even over the last 10 years, 41% compounded annual investment return compared to the broad market, just 10%. So, guys, Netflix stock has been just doing crazy stuff over the last 10 to 15 years anyway, so I'm not surprised to see it break out and potentially hit $400. So, do I think Netflix stock is too expensive? Absolutely not. Remember now, this company is very focused on subscriber growth, and they are going to stick to that business model. They're not going to be dabbling in advertising, so they're not really affected by the downshift in advertising spend like Facebook, Google, and many other companies are. This is a paid subscription company, and I expect them to have some of the best quarters in Q1 and Q2, as basically people don't have anything else to do but sign up for Netflix. So there you go, right there. I think Netflix. The only reason Netflix is not my number one pick is simply because I believe it's a much larger company, and I think that Roku has a lot more growth. Because with Roku, there is some risk with Netflix if people in the future lose favor and perhaps they're more interested in Disney Plus, and there's many competitors. So the thing I like about Roku is it really doesn't matter what people are watching, whether they're watching Netflix or Amazon Prime or whatever they're watching. It really doesn't matter. They're just plugging into Roku. Okay, guys, so those are my numbers for Netflix. So for you guys Netflix haters out there, what do you think about 43% total annual return over the last 15 years? Pretty solid numbers. So and then my third and final pick, guys, let's get into it, is Amazon. Okay, so Amazon is my third pick, guys. So why am I choosing Amazon.com? Well, this again has to do with the current situation with the shopping malls closed in the United States and in other countries like Europe and Canada and things like that. People still want to buy things, so they are going on Amazon.com. So I actually have a family member that currently works for Amazon.com, and they say that Amazon is making money hand over fist. So for a lot of people that were basically didn't want to do their shopping online and things like that, with malls closed, with a lot of retailers, doors shut, they really don't have any choice but Amazon.com. So I'm going to show you guys an article talking about another sign of surging demand on Amazon.com. It says they don't even have enough capacity to service all of demand, and the demand for their services like grocery delivery and things like that is through the roof. So they've even had to cut off new customers in the short term until they can hire more people to deal with the ridiculous surge in demand. So it says that Amazon's decision to suspend the Amazon shipping service indicates it's seen a significant increase in demand and is stretching the capacity of their fulfillment network, guys. So they have suspended that service because basically they can't fulfill the demand, guys. People are basically running to Amazon, and they are dealing with a massive surge in orders. So if we take a look at this, they're basically taking the focus off the Amazon shipping because of this. It says surging demand for groceries and household items. Social distancing efforts have led many to turn to Amazon to fulfill more of their basic household needs. And by prioritizing consumer staples, Amazon's making a big bet that surge in demand is seen presently will turn into greater revenue per customer long term if they can provide a timely service. So guys, with with basically no other options to go to, people are buying stuff like crazy. And it says, moreover, people become habituated quickly. If Amazon is the place to go to for their online orders right now, it's likely going to be the place they go in the future. Amazon's constantly increases capacity and demand should return. Amazon's constantly increases capacity and demand should return to more normal levels after the threat of coronavirus abates. As such, Amazon stands to see a permanent step up in sales going forward, guys. Okay, so here's another article posted by USA Today that says Amazon hiring an additional 75,000 workers to meet demand during coronavirus pandemic. Post on April 13th. It says Amazon isn't done hiring in its bid to meet demand during the coronavirus pandemic. The online retailing giant added 100,000 workers it said it needed last month, and they're hiring another 75,000 guys. So the reason why Amazon is hiring a ton of workers is because their revenue is going through the roof, and they simply cannot keep up with the demand. They are on a hiring spree. So, guys, it's obviously a very, very bullish sign for the stock. Otherwise, they would not be hiring this many people if they were not making a lot of money. And this is the trend this is the trend that we're going to be looking at in the future. A lot of people that were hesitant to buy stuff online, they're going to be sold at how easy it is to get things, and how Amazon still has 1 day prime delivery. So instead of going around in the mall and things like that, I think this is a big dent in the mall industry. And a lot of people, after spending weeks and months not really shopping in malls, I think a lot of people are going to reduce their dependence on them. So, guys, I'm going to show you one more statistic about Amazon.com. I'm going to show you guys that trailing return again. Okay, so I don't want to focus too much on the past, but facts are facts. Over the last 15 years, I showed you guys how well Netflix has done, over about 43% compounded annual investment return, with Amazon not as strong, but still very strong numbers, 31%. So, guys, those are my three stocks that my favorite stocks to buy right now. Okay, guys, that about wraps things up. I hope you enjoyed this video. I'm going to quickly recap those three stocks. My number one favorite pick, Roku, symbol ROKU. My second favorite pick, Netflix, NFLX. My third favorite pick, Amazon, AMZN, guys. So those are my three top tech stocks, my top three tech stocks to buy right now in this current market environment. So let me know what you guys think. Do you own any of these stocks? Have you sold any of these stocks? Or maybe you guys have some tech stocks that you prefer in this current market environment. Let me know in the comments. And if you enjoyed this video, please give me a thumbs up and subscribe to my channels for more videos. I post stock market related videos and investment related content every single day. So be sure to subscribe so you don't miss any more future videos. So that's it for now, guys.